Chow, and welcome to another episode of the Real Estate Podcast with me, Nico James-Bock, a broker with Royal LePage Signature Realty in downtown Toronto. In today's episode, I want to discuss the 7 factors that drive the real estate market. We are in a period of great transition. There's a new mayor, a new BoC interest rate announcement, but there are other factors that determine market value, and I want to get into those factors today. So I'm just going to share the screen. For those of you who are just listening to the podcast, not to worry, I'll be making references to the images and slides that I have made available for viewers on YouTube, so you can follow along if you're just listening. The 7 factors driving real estate today are: number 1, cost of ownership; number 2, job security; number 3, population growth; number 4, supply; number 5, regulatory changes; number 6, global factors; and number 7, replacement cost or value versus market value. These will be analyzed in detail. I will try to be as quick as possible. I don't want to take up too much time, but there's a lot to cover, and there's a BoC rate announcement that will be taking place just within the hour. So the first factor, cost of ownership. So this involves interest rates, and interest rates, as we know, impact the demand and price for real estate. Lower rates attract more buyers with lower mortgage rates, but also expand demand, which can drive up prices. So as I mentioned before, we also have BoC announcements that took place starting in March of last year. Those announcements obviously took place before, but the interest rate announcement, the hike started in March 2022. So up until today's announcement, there have been several interest rate hikes. There have been a couple of interest rate holds, and these have affected the supply, demand, and value of homes. We also have mortgages to consider. So mortgages are also a component of the cost of ownership, as well as taxes. There are property taxes, land transfer taxes, vacancy taxes, as well as insurance. With insurance, there's homeowner insurance, title insurance, and mortgage insurance. Homeowners also have to deal with maintenance and upkeep, as well as utilities. Number 2, job security. So the Canadian labor market bounced back an impressive 60,000 positions in June, more than recouping May's losses. Full-time employment was up 110,000, while part-time employment fell 50,000. Now, financial stability helps determine whether a person buys, rents, or remains dependent on friends, family, etc. Job security also determines credit stability and credit worthiness when applying for financing. So the question remains, how much can I afford? So that also applies to those that are in the rental market. Number 3, population growth. This is a big one. We are currently in a housing crisis, and it'll only be exacerbated by the number of people that are pouring into the country. There is not really a set plan in place where to house these people. So in the 2023 to 2025 immigration levels plan, Canada aims to welcome from 410,000 to 505,000 new permanent residents in 2023. From 430,000 to 542,000 in 2024, and from 442,500 to 550,000 permanent residents in 2025. In 2022, for comparison purposes, Canada achieved its target to admit 431,645 new permanent residents, which represents the largest number of people ever welcomed in a year in Canadian history. Now, the majority of these people will gravitate towards the GTA, and all will need housing. Factor number 4 is supply. So speaking of housing, real estate is a tangible asset made up of property and land on which it sits. And while it is unmovable, real estate, like other assets, is also subject to supply and demand. This means that the price of homes, like those of stocks and bonds, depends heavily on the law of supply and demand. It also reacts much more quickly to interest rate hikes or decreases in the interest rate. More demand, prices tend to rise. More supply, they tend to fall. We are in a critically low inventory situation in the GTA. Months of inventory, or MOI, it indicates how long it will take for the supply, the current supply of houses to run out if no new inventory is introduced, if no additional homes are put on the market. We also have to consider new housing starts. The trend in housing starts was 230,205 units in May 2023, down from 240,318 units in April. So it's a downward trend, which it should be the reverse, given the amount of people that are pouring into the city, into the GTA. The trend measure is a 6-month moving average of the monthly seasonally adjusted annual rates of total housing starts for all areas in Canada. With the housing crisis we are already in, how does the introduction of more people to the country help when we don't have a clear plan on how to house the people who are already here? That's the question. Number 5, regulatory changes. Government policies and legislation, including tax incentives and credit, deductions and subsidies, can boost or hinder demand real estate. We have a first-time home buyers tax credit offered by the CMHC. The Home Buyers Plan, HBP, is a program that allows you to withdraw from your registered retirement savings plan, RRSPs, to buy or build a qualifying home for yourself or for a related person with a disability. There are also energy rebates. These are provincial government incentives. There is the substantial renovation and the GST-HST new housing rebate, also offered to qualifying individuals. And addressing the land use and availability issue, there's the Green Belt Plan and the Growth Plan. Number 6, global factors. Now, we have wars and unrest in other regions, also anything that affects us locally, also affects migration patterns and have an impact on population growth and decline. We also have global economies that have to be taken into consideration when valuing property. This is generally measured by economic indicators such as the GDP, employment rates, manufacturing activity, the price of goods, etc. Broadly speaking, when the economy is sluggish, so is the real estate market. Conversely, when the economy is booming, the real estate market reflects that boom. Changing demographics can impact home prices due to the age, income, and regional preferences of buyers. So these factors, global factors, all affect home value. Finally, number 7, replacement cost versus market value. The market value of your home is the price you would get for your home on the real estate market, which includes the land. Replacement cost covers the cost to rebuild and does not include land. So replacement cost goes up or down depending on inflation, supply, and demand. Market value goes up or down depending on the other 6 factors. The decision becomes, do I buy new, resale, or renovate existing? property. I think when we are looking at these 7 factors, we also have to take into account what has occurred in the past, starting with, because we're in July, I guess we should start with what has happened since January 1st of 2023. So January 1st, 2023, we had the introduction of the vacancy tax, which is a regulatory change which impacted values to some extent. We had a BoC announcement January 25th, which brought with it a 0.25 or 0.25% interest rate hike. But we also had a pause announcement. So during the January 25th interest rate hike announcement, there was indication that the moving forward, the BoC would consider pausing the interest rate and holding firm on the existing rate for a period of time. That held true for the February and the March and April interest rate announcements, which were all holds. In March, there was also a banking crisis, so that also is an important factor that occurred in 2023. It was short-lived, but nonetheless, it did have a very short-term effect on pricing. On April the 12th, there was a rate hold, which was a second rate hold following the March 8th announcement. So that was the second rate hold of 2023. Now we go to June. The June 6th BoC rate announcement was actually a small hike. So it was another 25 basis points or 0.25% interest rate hike in the prime rate. And that was a result of the spike in inflation, which occurred in April. So it was an expected move, at least on my part, by the BoC. Once the effects of the inflation rate spike trickled down through the system, the BoC reacted in kind by raising the interest rate, the overnight prime lending rate. Now, there's another BoC rate announcement on June 12th, which is today. So that announcement will take place within the hour. Will it be a rate hold or another rate hike? So my feeling is that it will probably be another rate hike, again, in response to the spike in inflation, which is still working its way through the different economies. So that's just speculation, obviously, on my part, but I think it'll be another rate hike. And we have the swearing in of a new mayor. So Olivia Chow is the new mayor of the city of Toronto. The new mayor has a mandate to fill, and she made several promises to address housing, cost of living, transit, and a few other issues that are affecting our city and the ability to house the many people that are coming in to the city. So the question remains, how will today's events affect real estate values moving forward? It will remain to be seen, but it will start with the July and August market reports, which I'll be making available in due course. As I mentioned before, we are in this first 12 days of July, and we have had the June market stats available for a few days. So I want to go over those very briefly, just to give you an idea of what has been happening in June as a result of the factors that I just mentioned. June saw a slight increase in home value. This is home value of all types, so condo and castle. Castle being my term for freehold properties. So the average price is 1,182,120, up 3.2% from 2022, 1,140,796. So it's a slight increase, but an increase nevertheless. The number of sales is 38,696, which is down slightly from this time last year. The months of inventory at 1.89 continues to be relatively low and still in a seller's market territory. 1.89 is very, very low, very, very tight market conditions. But at the same time, the pressure on buyers because of the interest rate hikes is leveling off some of that price appreciation. So although prices are increasing at a more moderate level, the fact that buyers are having a more challenging time qualifying for mortgages and being able to afford the prices it's tempering a bit the prices. This also is relatively a normal occurrence in a summer market. This market is more heated than previous markets simply because of the low inventory level. So it's a balancing act, and if you require assistance navigating through that, I will be happy to help as always. As we look ahead, the next interest rate announcement will be September the 6th, followed by October 25th and December 6th. So there are many opportunities still to come for the BoC to either increase the prime lending rate or hold firm. I don't see rates coming down this year in 2023. I believe I can make that statement with a high level of certainty. I'm not seeing interest rates coming down. They may, the BoC will continue this dance with inflation to try to wrestle it down moving forward, to try to get it down to its target rate of 2%. But so, we'll see interest rate hikes. We may see interest rate holds, but we will certainly, in my opinion, not see interest rates coming down before the first quarter of 2024. So my end note following that statement is prices are still trending upward. Okay, we will continue to see the inflation dance as the powers that be, namely the BoC and other government powers, try to wrestle it downwards. There isn't anything we can do regarding interest rates. That's the fact, and some of the other factors affecting value are beyond our control. We have to live our lives and make decisions that are best for us right now and adjust those decisions as circumstances change. If you don't have to move, then don't, just stay put. First-time buyers, upsizers, downsizers, and most renters can and should take advantage of opportunities in the resale, assignment, and pre-construction markets now, because these incentives, these opportunities won't stick around forever. There will be short-term changes to the incentives. And as we move forward in 2023 and into 2024, prices, as I mentioned before, will continue their upward trend. The demand also will continue. And these incentives, especially some of the incentives that are offered by the pre-construction builders, will disappear or they'll be severely reduced. So now is the time to take advantage of any incentives, rebates, or opportunities that exist, okay? As for existing homeowners and investors, patience continues to be profitable. We will likely do so, and will likely be so for years to come. That is it for this episode of the Real Estate Podcast. My contact information is always available and will be available in the notes to this podcast. I will have another podcast following the BoC's announcement later today. So look forward to that and enjoy the rest of your day. Ciao, ciao.